Hello and welcome to another update video about Solana. Solana broke yesterday, I think it was, out of this inverse head and shoulders pattern to the upside. Is it going to maintain above that breakout point or not? Market will tell. I think it's actually screaming for a pullback, but that's obviously not guaranteed. I would just want to make a case again for an overall bullish scenario here on the Solana chart, but it doesn't mean it has to go up directly, okay? So let's talk about the structures. First of all, the base case is at the moment, and that's sort of the scenario on the larger time frame. It's important to distinguish between the two, the 4-hour time frame or the daily time frame scenario and the 1-hour time frame scenario, which is really the short term. So first of all, the base case is that this third wave obviously topped around the 25th, 26th of December. That was around $125, $126. Fourth wave pullback unfolded. Could have bottomed here, could have completed here around the 23rd of January. This is begging for a deep wave 4. I talked about that. This took roundabout only a month and really only reached the 23.6 Fibonacci retracement, whereas the wave 2 took a couple of months. Now, a wave 4 and a wave 2 often have the same length, and therefore I'm thinking it is at least quite likely that we could come down once more in the wave 4 lower. That is definitely a scenario I want to have still on the chart. That's why I've got it listed here as an A, B, C structure in white. So don't forget about this scenario. This, however, would require a break below $84 to confirm it. So that's the pivot. That's the main level that I've got on the chart where it flips from more directly bullish to, okay, short-term bearish, but still overall bullish, as long as we're holding the overall orange support area, which is relevant for the fourth wave. Now let's look at the 1-hour chart. And here we have two scenarios I'm following. Let me actually take out the micro count. So, okay, so the idea is here, there are two scenarios that I'm following. One is more directly bullish, okay, so it's entirely possible that after the 5-wave move to the upside that we've seen between the 23rd of January and the 30th here, which was the $108 high, that this 3-wave pullback that occurred, which bottomed on the 6th of February, here around $92.50, round about that level, that this wave 2 bottomed here. So we had a 1-2 setup, and we're now in this third wave to the upside. And I mentioned to you that I would like to see the price get to round about $125 next after the breakout. But of course, we could get a little bit of a pullback along the way. The idea is only that we should, to keep this more direct bullish scenario alive, we should see the price hold above $96.66. This is the micro support level that I shared with you in the previous video today already. Basically, it's a more accelerated 1-2, 1-2 setup. Just want to show you here the nearest possible support from a Fibonacci point of view. I only marked it with a question mark because it's really a small wave degree. But yeah, if this is another 1-2, 96.66 is the key support. Not the target, but that's the main level where probabilities shift. Because if it breaks, then it's this white count, and we are dealing with wave 1, but then A wave, and it's only an overshooting B wave, but that should really not stretch much higher, and then we could come down in wave C. They are just two variants of the same scenario, so either more aggressively, more directly bullish, or we come back in a wave C. At the moment, I can only highlight to you that this potential for a C wave lower is still there. So it's just something you need to be aware about from a risk management point of view. I'm not calling this, but I tell you that below 96.66, this is likely what's happening. And then the next support afterwards is 84. So we've got 96.66 as first main Fibonacci support level, obviously with a layer of micro support levels above it, but this is really the one where probabilities shift. And then below that level, I have to assume it's the white C wave, and we are still in this wave 2. And yeah, but then $84 is support. Okay, so we move from support to support. At the moment, we're not even close to any of them. So I'm watching for higher prices, first of all, against 96.66. Now, also, let's talk about upside targets. We have the first main level here around $117. It's the next Fibonacci extension, but it's also a previous swing high from the 2nd of January, and then the very, very important $125, $126 level, which is also the 100% extension level. So that's the next main level really to watch. And then, yeah, but overall, I mentioned if we get a sustained break, and especially as long as we're holding 84 now, a realistic target for this fifth wave, which happens after this fourth wave, yeah, that's $190 plus. So just want to give you a quick update, not really any changes. So hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.